All right. Good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for July 16th, 2020. So today turned out to be a day to think about coaching. My, trading and business mentor, Bob, is he in here tonight? He and I have been looking at different coaching strategies for businesses and whatnot. And Bob is a money manager out in Colorado. And a lot of his clients are business executives. And so he started a podcast where he interviews, business leaders, strategic leaders about what they do and how they do it. And so we're just we generally both think like businessmen, but it just happens that we're, managing money and trading. But that's the same mentality that we bring to trading is the same mentality that businessmen bring. So there's a nice synergy in there. So we were both listening to a couple different guys that offer coaching advice and strategies, and we're thinking our way through it and whatnot. So coaching was kind of on my mind. Coaching is on my mind also because our three-star general got a new leader. He's in charge of all Army schools, and his annual training guidance to us was to think about how to turn our leadership instruction into preparation for our students to go develop Army leaders, as opposed to what it had been, which was a survey course for leadership ideas and skills for organizational leaders. So that's more of a technical approach, but our new three-star is kind of a man of the people, an old infantryman, and he wants us to have more of a direct effect on the leadership development at the unit level, at the squad, platoon, company, and battalion level, down at where wars are fought and won or lost. So a much more immediate focus and applications focus. So what that means for us, in my view, and the position I've been taking with our leadership who are designing curriculum and all that, is that our college needs to be a teaching college. That when we're teaching these guys how to develop their subordinate leaders after graduation, they go back to units and they become leaders and commanders, and then they have to develop those young leaders. So if we want to teach them how to do that teaching them how to be a coach turns out to be a pretty powerful leverage, which means that we need to coach them about being a coach, which means that our faculty has to develop the skills of a coach and not just of a lecturer on the stage. A lecturer on the stage is only concerned about saying it correctly so that when it leaves your mouth, it's correct. And you're kind of not worried about what happens on the other end because it's the student's job to internalize that, then take a test and then pass the test to show that they're thinking the way the teacher wants them to think. That's the old school of traditional lecture built on the old university model, sage on the stage. What the three-star general is challenging us to do is the same thing that leaders of craft knowledge throughout the centuries have been doing, and that is, how do I ensure that I can transfer the skillful knowledge that I've developed to the next generation of artists and craftsmen so that they can be better than me? And so now it's not what you send, it's what sticks. So one of the ways that you can think in that way is to adopt the strategy of coaching. So a coach is designed to help the player develop their skills to the highest possible level. And so I'm trying to help our college think through the implications of his challenge to us to say that what we've got to do is we have to become coaches of our students and then require them to demonstrate that they can coach while they're here in the safe environment of the university. So if they can demonstrate the ability to coach here, then we know that they can deliver that same skill set when they get to the unit. So it's not enough to talk to them about it. It's not enough to even be a good coach of them. We have to put them in a position where they have to demonstrate the ability to coach. So who could a student coach? Well, a student could coach themselves. They could coach their peers. They could demonstrate the coaching of others in the classroom. They could actually perform coaching functions on the faculty, because as the faculty is trying to deliver good coaching technique, being good demonstrators of technique, we could actually ask these students to evaluate the way that we are coaching them according to our coaching model. Am I coaching you the way we say that coaching should be done? And then you can give me feedback on how well I'm coaching. So now what we're actually in the position of is this diagram in the middle, which says there's a dynamic relationship now. This infinite symbol is like an infinite energy. There is a cyclic relationship now between the coach and the player, where the coach gives instructions and the player gives feedback through their performance, and then the coach gives feedback about the performance. But the player can also give feedback to the coach about how the coach is coaching. So when both of the people in this relationship, the coach and the player, treat the endeavor as co-creation, that what we're trying to do is raise our skill levels on the team, now the coach and the player have a mutually supportive, reinforcing relationship where the coach helps the player become the best player they can be, and then the player can help the coach become the best coach they can be. For that to happen, each of the people in that relationship have to have the attitude, habits, and intention. They have to put in the work to be able to give and receive constructive feedback. So there's not just the intention, but there's also the communication. Well, we're not just talking about, doing the laundry here. It's coaching and playing about something. So there is some game that we're playing, and there is an art and a science of every interesting game. And there are certain measurables that are part of that game that are easy to focus on and around which you can build skillful behavior. So there is some relationship between the nature of the game and the things you can measure and the skills you perform, and then your communication about those skills. And then there's the habits that we bring in to make practice perfect. And the way we practice matters. And then the feedback and communication skills we give each other enables each one to become better at what they're doing as a consequence of the quality of that relationship. If it sounds like I've said this before, I have said it before. In fact, the last time I said this was at soccer practice 90 minutes ago to my high school girls team, because I handed them out their smart cards and we were taking a look at how a coach looks at players, and I was suggesting to them how players should look at coaches and how we can both look at the game. So we started talking about the essential elements of the game we play, soccer, and the most important measurables and skills. And I spent today's practice teaching them how to see through the eyes of a coach and how they were playing. And I was helping them understand that the feedback that I'm giving them is based on how I see them playing and performing. And then the method and the mode and the style of the feedback is designed to help them improve their play. It's not to judge them as good or bad people or anything like that. It's simply how to improve their skills in the measurable areas in the art and the science of the game based on how I see the game and how I see them performing. Well, it's not enough just to see the game in a certain way, but then the communication of those of that information is there's a certain knowledge about how to say it. And then all of this, how to see the game through the eyes of the coach, how to play the game from the eyes of the player, how to talk about it in a meaningful way that improves our performance and makes it clear about what we're trying to do, is all aimed towards the goals that we're sharing and the path that we've mapped out for continuous improvement. And so the most important discussion I had with them tonight was to think about these questions here. If I'm a coach, I can ask the question of a coach, who do you want to coach? And if I wrote that in the form of a job description, I could describe the kinds of players that I want to apply to be coached by me. If I'm a coach that has a choice about who I decide to coach, if I get to be selective about that, and I do, well, I can define the kind of player that it is that I am really interested in coaching. And if I tell them that and they want to be coached by me, then they know what it is that I want them to be and aim towards. So thinking about answering that question, who do you want to coach, by describing the job description, the qualities of the ideal player. That's no different than saying, hey, I want to hire somebody for my business, and these are the things that I want them to possess, the knowledge, skills, habits, and attributes of what it is that I want them to be. So a coach can say, this is the kind of player that I'm looking for. And the reason I'm looking for that kind of player is because that kind of player ends up developing the skills to play the game beautifully and to get the most out of their potential and to become a good teammate. So we talked about why a coach should think about what kind of players they want to attract and what kinds of players they will not accept, because you get a choice. And I said, well, if a coach gets to ask that question and to write a job description for players, most importantly, Dem, I said, you guys as players, who do you want to be coached by? What kind of a coach do you really want to have? If you think, do you want one who lets you get away with murder and doesn't push you and doesn't hold you to account and lets players run amok? Is that really the kind of coach that you want to have, really? So I gave them some homework today. Our next practice is Monday. Their homework is to answer those two questions, to come in writing with a little essay that says, if you were a coach, what kind of a player would you want? And if you're a player, what kind of a coach do you want me to be? And then I'm going to ask them to measure themselves against what they defined as the kind of player that they think a coach would want to have. And that's important because these high school girls help me as assistant instructors and assistant coaches for the other youth teams that I coach. I coach a U8 and a U10 co-ed teams. And I use my players to help teach them the skills, but also to develop leadership in my players. So this is going to be central to the kind of a relationship that we have in the course of the year. And this is part of a larger discussion about leadership and the relationships and voluntary transactions between people and whatever they're doing. So you could substitute the word player for trader and get the same discussion. You could substitute the word player for Army officer or Army leader and change the word coach to professor or whatever, or business owner and employee, or anybody that you're in a relationship, any relationship that you could define. You could write it in the form of, hey, what are my expectations or what are my desired qualities and how well am I manifesting those qualities in the, so as a coach, am I really manifesting the kinds of qualities that would attract the kind of player that I want to attract? And so there is a synergy, there's a mutual reinforcement in here. So the reason I say all this is to say the following, that it's my position that the way you learn best is by becoming a teacher, because it forces you to look at the material through many different eyes, not just your eyes and how you learn, but through the eyes of others. And so in that multi-dimensional look, you end up seeing more nuance about the game, the trade, whatever it is that you're doing, and it makes you a student of the skill, of the craft, of trading. And that it's a well-known saying that if you want to learn something, try to teach it some. We're seeing a lot of evidence of that already this past year through the way we're doing the hybrid trading and the small learning groups. And so I'm really excited to see what the girls are going to come up with on Monday. But I posted a couple things in the on Patreon and in the chat room today that addresses this directly. So one of the traders sent me a question that said, "Hey Ken, now that I've mastered the kata number one," he didn't say master, he said he had successfully completed kata number one, and he was interested in expanding now to collapsing dragon and emerging dragon. Now, this is a trader that's only been doing this for a couple of weeks and hasn't even been through the hybrid course. And so he asked a fair question, and that is, how do I set the initial stop for the collapsing dragon and emerging dragon? And asked me an innocent question. So naturally, me being me, I turned that into an elaborate answer about learning how to fish. And so the best way to acquire the knowledge that of whatever knowledge, if I have any knowledge that is of worth to you, if you want to get the fastest transfer of knowledge, skill, and experience, it's to do the following. When you ask me a question like that, you don't get to stop thinking. That's when you then ask, well, how do I think Ken is going to answer that question? So that makes you think like a coach or think like the teacher. What's he likely to say and why? So that makes you do some reflective double loop learning. And I say, let me try to anticipate the way I think he's going to answer that question. And then write it down and commit to it. Get skin in the game. Then when I give you the answer that I'm going to give you, you can compare my answer to your answer and see and compare and contrast. And in that analytical review, you are going to advance in your understanding by leaps and bounds over asking a question and waiting for an answer. In fact, I have a little teaching contract of sorts with my students. They're all senior captains, and so they have been direct action leaders, and they come to this school to learn how to be organizational leaders, how to be field grade officers in charge of 1,500 or 2,000 people, or commanders of large units, or working on a big staff. And they have to be independent staff officers to sort through pretty complicated problems. And nobody has time for a field grade officer to come up and ask them basic factual questions. I expect them to be independent and innovative in working through the problem and answering their own questions as much as they can and putting it all together. And when they don't know, to go conduct some research. You don't come back to your boss and keep asking him questions that you can answer if you just put your mind to it. So I have a contract with them which says if they're going to ask me a question, they have to also suggest how they think I'm going to answer it and why, as a check on learning to see if they're actually thinking the way I think and not just trying to wait for me to tell them what I know. That's not helping them at all. I told them I already know this stuff. I don't have. And the way I learned it was by working through it, not by somebody telling me, but I proofed it myself, and then verified and validated and checked with others. But after I'd done the due diligence. So we also have a contract that when it comes to doing our large exercises where we're running simulations and different groups of people are representing different headquarters, so we're working off a operations order and a plan, and we want to ask higher headquarters if they will give us more assets, or we have it's called an RFI, a request for information, where you don't know something and you want the higher headquarters to give an opinion or say, hey, I want you to send me some more artillery so that I can have more combat power. And then we send that request to higher to see if that'll solve a problem. Because we're asking for more artillery because we've done our analysis and we don't think we have enough to handle the mission that we have at an acceptable level of risk. So we're going to ask them to give us more of their assets. So I tell them, look, when you ask higher headquarters for that, that's legit, but it's going to take them 12 hours to answer that question. So when you brief the commander that, hey, the status of our request is that we asked them for more artillery and we're just waiting for them to tell us, that's not good enough. You actually have to say, imagine that you were on the receiving end of this request for additional assets and put yourself in that guy's position, and then look at the doctrinal answer of what are they likely to say when they ask you for that answer, and then what's the worst thing that they could say, and what's the expected thing they could say, and what would be the best possible answer and why, so that we can decide whether or not it's reasonable to expect them to give us the extra assets instead of just waiting 12 hours and hoping. No, we're actually going to look at the different answers they might give us, and then what would we do if they give us the answer of no? So we're not waiting for them to tell us. We're actually taking a look at our request and evaluating it. So that's how you learn to develop the skills of an organizational leader, someone who's working at a higher level of complexity, is when you come up with what you think is a good question, ask the question, but also prepare what you think they're going to say so that you can check on your own level of learning. So when I post that question in Patreon today, it was with an invitation to you guys to say, hey, how would you answer his question about where to place the initial stop on a collapsing dragon and an emerging dragon? Well, that's asking you to see through the eyes of a coach. How would you answer that question if you were trying to teach somebody? And why would you say that? And what's the justification? And how does that justification connect to the larger body of knowledge? That's how you can check back to that ecosystem, that body of knowledge, to see if you're able to reason things and you're able to think like a problem solver instead of a problem identifier. You know, your job is to keep going and to ask one more question or to add one more thing to it. So my answer to him on that question was, in the usual way, I asked him another question right back. I said, well, I understand your question. What I want you to do is take a look at a couple chart samples, come up with where you think I'm going to tell you to put that stop. And so he did. He came back and said, well, I think my initial plan will be to put it at this location. And then I said, well, I'll get to that in a second. Well, let's just go ahead. Let's just go there right now, because we're too far to stop now. Yeah, here was the question that he asked me. How do I handle stop placement for a collapsing dragon and an emerging dragon? And I said, hey, put your answer in the comments on Patreon and I'll discuss it tonight if there are 5 answers. And hint, those of you that ever asked me a question before, you kind of already know what I'm going to say. You know, this is not a surprise to you. So some time passed and he came back to me and said, well, and I thought this was pretty good. My initial inclination is the initial stop should be at the peak of the RL10 hump and then trail with the Bollinger Band mean once the Bollinger Band mean gets to the entry, which is like the Wuwei Exit. That's a really good answer. Except it's not the best answer. So the subject of this lesson now is how to develop a course of action that you can recommend to others for them to take on a risk based on your recommendation. And this has really powerful implications for impulse control. So here's how this thing goes. When you're briefing a commander about a course of action or a recommendation, you're asking him to take your professional opinion and then make a decision that's going to commit people's lives to his decision. You're asking him to make life and death decisions on other people based on what you're telling him he ought to do. That is a very serious position to be in. So when I'm ready to make a recommendation on a course of action as a trader or as a coach of traders, I'm ready to describe that course of action to you when I'm ready to commit to it with money. And that level of commitment and that level of due diligence is different than the first inclination. And if Robert Gardner were still with us, he would say that's a tell. That's the words that I picked up on in his answer to me. He said, after I asked him to come back with what he would recommend or what he thinks I'm going to say, he said, well, my initial inclination is that the initial stop should be here. Notice the meaning of that phrase, first inclination. Here's what I hear. The first inclination is a tentative response that hasn't been thought through completely, definitively to a conclusion yet. It's just the first obvious urge. Well, the first thing that came into my head was this, so I'm just going to tell you what was the first thing on my mind. Well, that's what herd animals do because, well, maybe it's good enough. So it's like a knee-jerk reaction, and then they just do it. That's what herd animals do. And apex predators make a living on herd animals that act on their first instinct, that fight or flight syndrome, to act without thinking. Apex predators make a living on herd animals that think that way. So if you don't want to be a herd animal, then what you got to do is you got to develop the idea until you are ready to commit to it. What do you mean commit to it? I mean you're ready to put money on it. It's even more than that. If somebody that trusted you asked you your opinion on what to do, and then you gave them your recommendation, and you knew that they were going to put their money on the line because they trusted your recommendation, what would that do to you and the way you think your way through your recommendation? I think if you're a mammal, and if you're the kind of person that's still listening to this, you're the kind of person that's going to do your due diligence and not ask them to take a risk that wasn't fully developed, that take a recommendation that didn't have due diligence. You're asking them to put skin in the game on the basis of their trust in you. That's a pretty sacred responsibility. So I would tell you that the first inclination is not good enough. The tentative response is not good enough if you're going to make unless you label it as such. You say, hey, this is just the first thing. So that's fair. So if it's not a recommendation or it's not a definitive position, then you got to label it in such a way that it's absolutely clear what it is that you're telling them. Hey, this is just the first thing that came to my mind. I'm not saying do that or anything like that. So all the the caveats. But what we're trying to do is this up here: how to develop a course of action that you can recommend to others for them to take a risk based on your recommendation. So when you are ready to commit to your recommendation or to your answer, that's what that feels like, is that you've done your due diligence and you've given them the risk, but you said, yeah, I've thought it through. This is what I think. So let's call that course of action 1. So when he asked me that question, it's not good enough to say, here's my first inclination. We got to move on to where if you didn't tell me anything, here's how I was going to act on it, because I've thought my way through it, and here's the best idea I can come up with. So the first one you come up with that can stand that level of scrutiny, that standard of being legit to recommend to others, course of action 1, your job is to come up with 3 courses of action, then compare to each one to that level, and then compare and contrast them against a set of evaluation criteria to decide which of those 3 thoughtful, deliberate courses of action are actually the best, all things considered. Then you can make a decision. So you detect. Now let's look at how this little process connects to the way we think about trading. Detect, decide, deliver, assess. That's the D3A. The first thing is I detect an opportunity. Well, I have an opportunity to trade a collapsing dragon, and I got to decide how to place the initial stop so that I can deliver the entry and then assess and manage the trade. So that decision on where to place the initial risk matters, because it's all part of this D3A. And then this is all also connected to plan, prepare, execute, and assess. I'm planning on where to put that initial stop. Well, what I told him was that he's got to take his first intention, his first inclination, which is pretty good, by the way, fully develop it to the point where he could actually recommend it to others, then develop 2 more courses of action to be able to compare and contrast. To fully understand your recommendation, it means you had to consider a couple other legit choices and then decide why yours was a better reward to risk ratio. So if you're going to compare 3 things, what you have to do is define your evaluation criteria first so that you can fairly compare those, because otherwise you'll commit the following crime. What guys that are first learning how to do this end up doing is something like this. Well, here's what I really want to do, course of action 1, but my coach or my boss or Ken is going to require me to give a couple other courses of action. So I really know what I want to do. Let me just BS my way and put a couple other things in there, and then it'll be clear the one that I want is really better, and then he'll pick the one that I really want. Well, that's a lie by omission. So the first thing we got to do, so that we don't fall victim, we don't fall in love with our first idea, is that we develop our evaluation criteria first. So here's how you do that. You answer these questions. Hey, what matters to you when you're establishing an initial stop? What's important about the initial stop? Well, let's take a look at a functional question. What does the initial stop have to do? Now, here's how you sharpen that tool. Hey, imagine you were going to hire the initial stop as a reliable worker. How would you describe the job description for the worker that you're trying to? I want to hire somebody to do my initial stop, and they have to have these qualities. Well, suppose a bunch of people came in to apply for that job. How would you decide among a pool of applicants who show up for the first job? First come, first serve? Or would you have some way of comparing and contrasting? How about something like this? One course of action is I'll just use one frog box. for the following reasons, blah, blah, blah. Hey, I'm going to use half of an ATR, blah, blah, blah. I'm going to use the hump of the dragon for the reasons, blah, blah, blah. Well, those are three legitimate answers. I could understand why you could come up with that. So how am I going to pick and choose between three pretty good answers? Well, that's where I need evaluation criteria. So I got to define those first before I develop those courses of action so that it's fair. I'm judging them against something like an objective standard, which is, what does the initial stop have to do? Well, maybe it's something like that. I'm going to ask you to figure it out, but here's a way to get you started. It has to be close enough so that I don't lose too much money waiting for the trade to be invalidated. It has to be far enough away so that normal noise that doesn't invalidate the signal doesn't take me out of the position. So in other words, it has to be in a location where I'm sure enough that the initial hypothesis of the trade is going to fail that I can legitimately say this experiment didn't work. So I got to have confidence that, and I don't need to go and then add extra insurance and all that, but I got to be confident enough that the hypothesis is invalidated, but not so close that simple noise gets me out. And there may be some other reasons, but that's all the initial stop has to do, is to tell me if this thing is failing right away. That's all. Then I can use that information to manage the size of the position based on some other factors. But that's all it has to do. Now, what the trader gave me was then he gave me another follow-on, which was telling me how he was going to manage that trade afterwards. But that is, I want you to realize, that's a separate issue of how to manage the trade after it is successful to some degree. So all he's got to do is think of what the initial stop is supposed to do, what's its purpose, and then and only then can I tell you where you ought to put that initial stop. Because I have an opinion about what I want the initial stop to do for me, but it's really important for him to say, what am I looking for in an initial stop? Not just so he can answer that question for the collapsing dragon and the emerging dragon, but when he starts modifying the rule sets of the kata, and he starts trying to figure out how to maybe modify the initial risk, he's got to know how to make that decision and how to ask those questions. So I'm teaching him to fish. So here's the key insight of this first half hour. When you are considering whether or not to act on a hunch or not, think about this. Ask yourself this question. When you think that you're ready to act, would I recommend this course of action to someone if they were going to trust me with their lives and money? Would I? Or am I just going to give them a hunch? Is my hunch good enough to them risk their lives on it? Think about it this way. What if somebody knew that you were a trader and they came and talked to you and they said, hey, what should I do with my money? And they're asking you for a recommendation and you're ready to tell them something. Am I committed enough to this idea that I'm willing to let an informed friend or family member take that risk that is embedded in my advice? What do I owe them for due diligence before I make a recommendation? So I'm pretty sure that you can answer that question. But here is the most important insight. This is how you manage your monkey. Apply this same kind of rigorous loving kindness to yourself. So when you find yourself in the trade and things aren't going well, whatever, and you just say, screw it, I'm just going to take this next one and I hope that's going to work. That's a hunch or a prayer or a hope or a dream or a gamble, or you've given up. Would you tell somebody else to do that? You would not. So give yourself the same kind of rigorous loving kindness to make sure that you only act on the basis of due diligence and respect for others. Give yourself the same kind of courtesy and care that you would give to others. Act on things with commitment after you have done your due diligence. And do that for yourself. Nobody else is going to do that for you, by the way. They figure you're a big boy and girl. You know what you're doing. So act like it. DBHA. I almost wrote, don't be half-assed. I want you to be fully asked. So if you wouldn't recommend for somebody else to do it, don't you do it. And use that to help your fireman discipline that chimpanzee that says with desperation, I gotta get in, just don't do that. Act with rigorous, loving kindness for yourself, the same way that you would act for others. Do the due diligence. Or just act on impulse and be a herd animal and get eaten by apex predators. It's your choice. Now, I'm not trying to be mean and vicious here. This was really a good question. How do I handle stop placement for a CD or an ED? Now, I don't know if he's done the due diligence or not when he asked me that question. I just took this as an opportunity to help him see through the eyes of a coach. And I'll tell you, every time you guys ask me my opinion about something or how do I do it, I go through this kind of mental self-flagellation because I know there's a good chance that you may be acting because of trust in my recommendations. I'm always mindful of that. And so I try to be as careful as I can in my answers. And I know that you are responsible for your results and that you own those decisions and that you're taking my commentary with a grain of salt. You should. But even so, I still feel that connection to the words that I say. So I want you to start thinking like a coach so that you can raise your game when it comes to the way that you play the game. If you can learn to look at your own behaviors through that coach's lens, think twice, act once, then you are moving along the path towards intentional action, towards management of your monkey mind, not just knee-jerk responding to everything, but what would my coach say if he saw me about ready to do this thing? If you can put that wedge in between the trigger to act and the impulse to act and the decision to act, then you're good to go. You are thinking like a coach, a player coach, a player, and you'll be in a position to be able to give insights to other people in your small working group when you start acting like a peer instructor and start teaching each other. So all you ever got to do is testify to what it is that you know and how much confidence you have in it and the justification for believing in that way. All we're looking for are truth tellers with transparency and the honesty to say what I know and what I don't know, and the courage to offer what you know with the limits on what you think you know. Then we can actually start building these things together. Your point 2 and my point 2 plus point 4 of our courage gets us to the point 8 solution, which we can tentatively offer to others. Say, hey, this is just version 0.8. So, let your conscience be your guide and let the buyer beware. Not claiming anything beyond the fact that it's version 0.8, but it's not nothing, it's something. So we can start acting in a measured way to manage the uncertainty that is the standard work environment of the trading arena. That's always what it feels like. So if you're going to go into that arena, you better have a plan that has been prepared and trained in execution and continuous assessment, but know that you step into the boxing ring, you're going to get hit. You're trying to hit, but you're going to get hit. So you got to be able to deal with the ebbs and flows of the daily trade. And you're going to feel inclinations to do things, to act on impulse. How do you prevent the chimp from winning? He weighs 600 pounds. He's a gorilla, for crying out loud. The fireman has to have some skills that allow us to manage that chimp. The chimp does a lot of good things for us. It gives us that emotional energy to take things in the first place, to be even willing to take risks for the potential reward. But he's not a great thinker. And his hands are a little clumsy. He doesn't have fine motor control, and he doesn't have the ability to imagine alternate futures and weigh different courses of action and to manage impulses and to defer gratification. That's what separates our species from chimpanzees. But we share a lot of that same DNA. So I say all that to say simply that give yourself the same kind of rigorous loving kindness. Rigorous, I mean due diligence and sharing with others. Rigorous loving kindness for yourself that you would give to others. Be gentle in that, but be firm. Act with commitment when it's time, when you've done your due diligence. Don't be a herd animal. Or just be a herd animal, whatever you're going to do. I trust you to make that decision. That was all triggered by Ken Hum, who in our collaborations has formalized the Wuwei Exit and shown us how to do it. We call it the Wuwei Exit because it actually solves the problem of, should I be a sniper or should I be a manager? Should I be taking my impulsive profits when I feel I should? Or should I just follow the disciplined rules of the manager no matter what? That creates tension and anxiety and cognitive dissonance all the time unless you have a way to resolve that. So the Wuwei Exit is simply a way that we say, hey, if it's gotten that far, give half to the sniper, half to the manager. That's the wisdom of King Solomon. And split the difference. And now all the tension is resolved. And then each half only has to do what it does. And then we'll take the average of that exit and we'll be happy with that. Because we decided that that was justice, that that was wisdom, and that we were seeking for a wise, low cost, low cognitive energy system that would allow us to study the results and then to refine the sniper and the manager rules in their own dimension without trying to pick which one was the best one of all time. That's certainly going to get you to regret. So the Wuwei Exit, as described by Ken Hum, shows us the way to do it with effortless action. So now here's my challenge. And I sent this over to Tharpland to see if they want to talk about that. Would you describe your exit management system as effortless? So I then asked Ken to describe the learning ecosystem. Now, Ken Hum is an old hand at this. He's been around for years. I think he would tell you that what we've been doing in the last year or so, last year or two, this evolving ecosystem is a breakthrough in the way that we're getting it done. So he described the learning ecosystem that we use as, and I couldn't say it any better than this, as a modern day digital apprenticeship, offering through an immersive experience in the trade, the integration and synergy of a philosophy, but also a process of learning and improving by doing, with the mindset and the decision-making skills, with methods and tools that allows a community to train together, do the work, learn for and with one another, to build discipline, internalize and solidify the skills, to grow the standard individually and as a community of practice. Bam, bam, I couldn't change a single word. I couldn't add a word to make it better or delete one word to make it better. That's just what it is. And I want you to notice he's pretty slick. He has picked up on the idea of the reinforcing hypnotic effect of bolding words in order to lock it in. So, with that in mind, that's what led me to say, how do you think I'm going to answer this question? How do I handle stop placement of a CD or an ED with a new trader who has completed kata number one? He's trading successfully after 3 weeks just by working on the supported spring crossing without any other encumbrance or diversions. And so his question was, now that he's ready to do collapsing dragons and emerging dragons, how do I handle the stop placement? The way I handle it is what's taken me now an hour to talk my way through. How to think like a coach, how to answer your own question, how to learn the skills of due diligence. It's not enough for me to say, hey, well, what do you think it ought to be? No, that's not fair. So I've got to provide a recipe, a process, some guidance on how to think about answering that question and all future questions. So this is what I mean by due diligence and developing a course of action, and then how to compare them. And I gave you 3 possible answers for what you might consider. And then for each and every person that has that question, don't you imagine that there's really an answer that's best for them based on their circumstance? We talked about that yesterday, that in the world of self, system, and market, that when you're looking to adapt a system for a market to yourself, most of the variables have to do with you and your skill level, your objectives, your confidence, your risk reward profile, the amount of time that you have available, the markets you like to trade, the other things you got going on, what your objectives for results need to be. All of those things go into the fine-tuning of a strategy, which is 80% of the idea. You got to fine-tune that final 20% to make it your own. And most of those variables come from inside the self dimension, which is why psychology is so important. You know, psychology is the difference between lightning and the lightning bug. That makes all the difference. The lightning bug has a point of view, has a perspective. Lightning just happens to be what it is. Psychology is the difference. Hat tip to Mark Twain. I hadn't initially planned on doing that for the first hour, but that's kind of where we ended up. So this coach and player dynamic, then, ask the question of yourself and in all things. How do you want to coach? Or who do you want to coach? Let me put it that way. And I would say, if you are a coach, how do you want to coach? What kind of a coach do you want to be for others? What would that job description look like? What would the job description look like for the coach that you want to coach you? If I'm not that person, then if you give me feedback, I may be able to be that person for you if it fits with how I want to coach. It probably does. So the player's feedback helps the coach become a better coach. The coach helps the player become a better player based on his knowledge and skills and measurables and all that stuff. But that reciprocal feedback loop is what makes this really powerful. And if we're sharing goals and a path forward, we can learn how to see like a coach and how to speak like a coach. So I hope to have given you in that first hour is how a coach thinks about answering questions that players bring. So when my Army officers bring me a question, I used to have very junior officers and say, hey, sir, how should we handle this problem? And my question to them was, it wasn't even a question, was turn around, leave my office, come back with the Army regulation that governs this problem. And the Army has a way of solving routine problems. So you tell me what the Army's system is for handling that problem and what the regulation says we ought to do about it. And then you take into account our situation, and then you tell me what you want me to do with that problem. Then I'll listen to your recommendation. And if it's a good recommendation, in the future, you don't even have to ask me. You can just do it. And oh, by the way, do that for all problems that you're going to come to me with. Because that's how I'm going to answer the question, guys. I'm going to say, well, what does the regulation say? And if you don't even know what the regulation says, you better not walk into my office if you're an Army officer that works for me. If you're a trader, that's different. I'm not going to treat you quite the same way. But that's sort of the same principle. That's how I was training those young lieutenants to become good captains and majors, is by learning how to think about standard Army processes. So what we've just engaged in here is sort of what I would call a story circle. And it has a past, a present, and a future. And inside that story circle, people of goodwill come together to rest, recover, relate, repair, repurpose, all of the R's in the middle. And so when you come into the story circle, you're bringing something, and it's purpose, principles, values, identities, roots, all the things you're grounded in, plus your experiences. And then you're bringing into that story circle something that you're planning on saying. It's kind of rooted in the past and your experience and all that stuff. And then in the present moment, when the story is being told, something magical and dynamic happens, that in the interplay between the storyteller and the story listener and the story itself takes on a dynamic quality that surprises everybody with the creativity and the reality of what just happened. You never tell the same story twice. You never step in the same river twice. So there's something that happens kind of in this present moment between the story, the audience, the whole team, and the storyteller. And this is an open-ended circle, because as the story is unfolding, new things are coming in and some things are leaving, and this is not completely planned if it's live and dynamic. And at some point, when that story circle is adjourned, the future holds something like, what do the people take with them? And where does that story go? And what does it do? And how does it morph based on their experiences wherever they go? And how does it replicate in other story circles? And when they come back and tell their story about that story in our next round, you get this notion that in the roundabouts, that walking man that comes in with head, heart, gut, hands, and feet, the 5 locations of knowing, that we have new things to say, and then as we say them, they take on a life of their own, which goes beyond our imagination, usually. And that's why things like Ken Hum's treatment of the Wuwei experience and exit management turns into such a powerful tool of collaboration and synergy that's the effect of the learning ecosystem that he was describing. So the reason we tell these stories and share our experiences is because we never really know how people are going to receive it and where they're going to go and develop it and go further, but we're open to the possibility. And as long as we're kind of united in these purposes, principles, values, identity, and these deep roots and mutual support, integrity, honesty, transparency, sharing, selfless service to others, in pursuit of R that can then be spent on things that will improve the world, Well, that's a pretty virtuous story circle that we're involved in. That's what I want to say about that. Thank you for your indulgence and your patience. So we've got a heck of a world right now. I mean, I kind of read the headlines to see what's going on. That coronavirus is just doing what it does. My sister-in-law is a nurse in California, and they are so packed that the protocol at her hospital is that if you're over 60, they're not going to treat you. They're just going to send you home. You think that's the flu? That is not the flu. "45% of counties are seeing an uncontrollable spread. Type A may have higher risks. People are getting fed up with each other when they see different standards of behavior. People are even getting belligerent when they're being offered free face covers. A 3 strikes and you're out rule for bars and restaurants. And even in spite of all that, monkeys are going to be monkeys. Party scene roaring back to life, the heck with it. Young people just going after it on Miami Beach without protection, idiots. The Georgia governor suspending all local mask mandates, just giving up. That's what giving up sounds like. You know, like George Orwell said in Animals Farm, some animals are more equal than others. We're getting worse at the science. Data is disappearing. But it almost doesn't matter because the leaders that we have are idiots. Republican governors turning on the president, finally fed up with the childish and immature response to crisis that he manifests on a daily basis. And what a quote. The White House vows not to let science stand in the way of reopening schools. Could you imagine a dumber statement than that? Well, that's what we got. So that's our world. Don't think this is life-changing? Man, it's never going to be the same way. At the same time, if we look inside our financials, market pretty close to all-time highs. Big banks, supported by unlimited Fed printing, they're doing fine. People with money doing fine. Mansions going for top dollar. You got a pool so you can stay away from the great unwashed? Sure. Meanwhile, eviction is looming for millions. Jobless claims are up. And we're so stupid that we can't even figure out who should get unemployment. Giving it to prisoners. That's how stupid we are. And the thing that's made the U.S. economy unbeatable for the last 50 years since Bretton Woods, the dollar, that's at risk because the rest of the world who's handling this crisis better than us, they're not waiting for us anymore. Who needs the dollar if there's better alternatives? 30-year fixed is getting desperately low because people aren't buying houses. Why would they? Kramer, not everything he says is stupid. He's a pretty smart guy. Big money wants to sell stocks. Why is that? Well, because as we saw yesterday, the 90-day regression line, that 90-day return, That's the best 90-day performance we may have ever seen. In the middle of a crisis pandemic where the economy is shattered, and big money benefited from all of that because Fed trillions enabled people to buy distressed assets and get a 40% return on investment when the rest of the world was on fire. You don't think they want to make sure they lock that in? That's 8 years of better than Treasury's results in 3 months. So yeah, do I think more chaos is coming? I sure do. And then meanwhile, the psychosocial, economic, political culture wars are shredding any sense of solidarity that people may have formerly held. Interest groups being pitted against interest groups, that's what social media, and then politicians who are doing vote calculus to get elected by breaking demographics down into splinter groups. Yeah, so that's the environment that we're in. And we've got to find a way to learn and adapt and manage risk and venture into rewards. And if you haven't done your due diligence, you're going to get the results you're going to get. You're going to get them anyway. But I'm going to take the path of due diligence and reward to risk and trust my judgment. And I'm going to manage my own risk. That's what I do. So where are we today? Well, here's where we are. How's that for a transition? So yesterday was pretty nice. You know, if we look back 3 days, we had a big sell-off, and then it rocketed north. And then yesterday it gapped up and held. It held above the sell-off. You know, the sell-off held above the previous day's high and then closed strongly. And then today there was some concerns, and it pulled back. It's okay. That's what it does. It pulled back. God dang it. Come on, Kenneth. Gap down, held at the RL10 peak, and basically just above the Z1. That's pretty good. Nothing wrong with that. Closed strongly for the intraday piece. Still was a net loss, but it had a very narrow range. Held above the Z1 line. Closed just above the 10-period regression line. So if we look at that 10-period regression, still very positive slope. That's good. It closed above the Z1 line. That's a good thing. Spent the whole day above the dragon. So here's the top of the dragon is top skin, the spine, and the southern skin. You got to come all the way back here to see the belly of the dragon. So we've had some nice moves in here. And today still remained above the dragon. That's a good thing. And it closed higher than it opened. So their buyers won a little bit. There wasn't enough to get it all the way back up to test yesterday's high, which was also the 10-day high. which is near the 30-day high. It would take another day like today to go back and test that, so that's not out of expectation. But there was a lot of weakness in the market today. We're going to see in a minute. So this was some recovery, but I look at this as something like half-hearted. It was not a full-throated rebound. There was still cause for concern. Worriedly optimistic. But we do have some support levels to contend with. You know, if it opens where it closed, we have the low of the day. We have the RL10 peak. The previous peak was here. So it closed, even it held support at that and then rebounded. So that's actually a good thing, right? We have the Z1, the whole dragon complex. The RL30 is sloping up. The dragon is steeply up. The PSAR extension is sloping up. The PSAR itself is here. The PSAR is below the 10-day low, because remember yesterday the 10-day low was here and it moved up to here. So we have solid support at a 10-day low, and it's just, you know, the PSAR is just a fraction below it. So lots of measured support levels. And then if that PSAR fails, the 10-day low fails, then it's Z2, and then the belly of the dragon, then the belly of the RL10, then long-term fair value, and then on all the way down to Z2. To the upside, if we can get through today's high of the day, yesterday's 10-day high, then the 30-day high, and then Z2, and the RL90. If it can get above the RL90, then it's free and clear. So could it get there in one day? Let's take a look at the last time there was a runaway upward day, when it bounced off the Bollinger Band mean. It bounced from here, and so could it get up to there? Yes, it could. Even if it came down to the low of the day, it could get to the top of this arrow and defeat the RL90. So as an upward price target, yeah, that could certainly be the case. How big was that move? Because remember, that's how big that move was. That's how big this move was. So a one-day move of this magnitude feels like a normal move. That tells you how narrow this range was today. That's actually, in some sense, if I wanted to make a negative spin, I'd say, well, they couldn't even push it higher than that. Yeah, it didn't fail, but it was a half-hearted effort. So the size of that move is $8. So wherever it opens tomorrow, an $8 move to the upside is certainly within range. So if you're trading the S&P and you had some motion, you could even say something like, as a minimum manageable risk box, I'll just pick $2. And that would give you a quarter of that average move, and that's not an unreasonable size move. Manageable risk box. How big is that? Well, here's what a $2 box looks like. From 318 to 316. You know, that's what a $2. Oh, that's what we had today, $2. A third of an ATR was that move today. That's the smallest move that we've seen since, oh yeah, that one. And what happened after that one? After that little consolidation in a tight zone, we started getting expanded volatility in both directions, right? We started seeing range expansion. So those little dojis become key potential turning points. That doesn't tell you which way it's going to go. It's never that easy. It went down and then went up, and then went down and now has gone up. So that's more volatility, not less. So this one had a big move down, big orderly move up. And now we've got this kind of action. So in my view, we've got to be prepared for a routine move of this magnitude north. And south. Symmetry being one of the most powerful forces in the universe. So if it opens inside yesterday's range, we have a yellow zone, which is non-directional, until it votes north or south. So that little $2 mechanical box like that. Those are the key levels. So now I blame myself for not being absolutely clear on this, but you guys were asking me, how do I find the mover? I literally use alerts on TC2000 just like this. Now, when you see me draw that green line like that, I make that an alert. So, and then a red line here, I make those alerts. And so I get a text message and a audible alert, a text message on my screen that pops up. Oh, that should be green, sorry. And tells me, hey, Ken, something just happened here. I literally set the alerts. So if I frame 10 trades and I have a mechanical frame just like that on all 10 of those, and I do, I put 20 alerts in. And then when I'm trading inside the yellow zone on one symbol and I get an alert from another symbol, that just tells me, oh, it broke out of its mechanical yellow zone, and now I probably want to be long on that. Now, I don't robo trade that. I have in the past, and at times I do, but not routinely. But I just can quickly go to that and see if I like it and go for it. So I use these trade frames to give me actionable information. That's the power of having an executive assistant in the form of your trading platform. That's how you find the movers. So if I've got 10, what's the first one of them that breaks out of his yellow zone? Oh, that's the first alert. That's the one I take. As I mentioned yesterday, I don't go through some, elaborate dance of saying, well, which am I going to not take that and wait for the 5DD or the other? No, first come, first serve, man. Let's go. Because this thing, look how big these moves are. When this thing becomes directional, once it goes, it goes. So I want to find the mover. I don't care why it's moving. I just know that it can move, and I have an action plan that's ready to go. So that's what that action plan looks like for the S&P. And I spend the time on the S&P. Why? Because it's the market, and that's worth 50% of all the returns come from what the overall broad market is doing. Fair enough? Yeah, I think so. So if you don't have Snagit and taking a screenshot of that, you should. Or you can use Snip and Sketch in Windows. It has, in Windows 10, it has a nice little screen capture, and that's good enough. I'm going to look at some some trade frames that people offered. Now here's what we're going to go to the daily report since we're here, and then we're going to come back and do some technical coaching with your permission. I'm going to take that first hour or so and make that a standalone psychology coaching lesson. So you'll have a chance to hear that again if you thought it was any good. I can't wait to see what Rich Romatowski does with his Cornell note sheet on that one. So here we go with the daily report finally. Appreciate your patience. So we've already gone through the health check. So here's the daily summary. Now let's see if I remember how to do this. Edit. Yeah, rectangle works okay. I guess. Bullish normal, that's good. Longer term, it's still oversold. But on the 10-day and the 3-day look back, those shorter term measures showed some weakness today. Still a 4% buffer to sideways. That's good. The ADX strength of trend is still very weak. So this is still a short-term traders market primarily. So that means I'm emphasizing the day trade, minimizing the swing trade. And you already know what I'm going to, the core trade I've taken off the table until after the election for reasons. ATR percentage still is a reasonably low 1.71. It's normal. Risk Z is still showing risk on, and it's at a sufficiently low level. But even that's starting to roll over, you know. My concern on that is maybe it looks just like this. This was a brutal, choppy time for swing trading because there was no directional follow through. And then what came out of that was the most recent sell off, a half step of a swing, and then a great big sell off, and then a beautiful swing trade opportunity, and then some grinding price action in which only fewer and fewer swing trades were following through. And that became the large cap tech leaders trade to the exclusion of just about everything else. It's only the US indexes above their 200-day moving average, but the Euro Asias now are. Emerging markets in Europe are above it. So really only Asia less Japan and Latin America are maximum suffering, but no signals on channeling or overreaction. I'm still seeing Microsoft, Goldman, and Intel in the max pain. Still an opportunity in here for Amazon, Simon Property, and Devon Energy. There's some intraday trades reasonable in there. And then for our Aussie friends, Alliance. The big winners remain American Express, the Dow, Merck, IBM, and Pfizer. This gains here in silver. Look at every one of these is a defensive play in the ETF 100. High yields, silver, corporate bond, short-term bonds, and junk bonds. So everything in the S&P 100 is all of the income producers. I would have thought there'd have been more dojis today. Microsoft to me looks like a real opportunity here. It's got a channeling, a triple screen. It's number 5 on max pain range compression, and the sell-off in it today makes it unusual. See, it's been good. I want you to notice on the 6 and 12 month, it's been very good. But the 10-day and 1-day, it's been exceptionally bad. So that's an opportunity to buy one of the 5 tech giants on sale. What do we know about the other tech giants? Well, Apple is in great shape. And Cisco, not really a tech giant, but mixed bag. Intel in a little better shape than Microsoft. So Microsoft is standing out among the tech guys in terms of reward to risk opportunity in a must-own thing. These four here are the ones that are triggering on the ETF, on the OR short. The OR short made a sharp move up against the downward trend. And so on weakness, that's actually something that could be a candidate for shorting. So if Kramer is right and big money wants to sell, then some targets that are ripe would be Travelers, JP Morgan, IBM, and Pfizer. You could get Travelers and JP Morgan by playing the short side of the financial sector. The other reason Microsoft is interesting is the only one that has an RSI2 of single digits, which means it has experienced a 2-day sell-off. So if you were to look at Microsoft and frame it on that basis, you'd be well served. Among the ETFs, now I wonder why. I am just noticing that your screen may have frozen. Are you not seeing the dailies? Microphone check and screen check. Has your screen frozen? I am just noticing that the audience view window on this is not updating. God dang it. Mic check. Hope I haven't been talking to myself here. Mic check. Well, I'm going to continue recording just in case. The rest of the daily is pretty straightforward. Lots of opportunities on the squeezes. Oh, God dang it. All right, I just changed the internet connection, so it looks like the screen was frozen. God dang it. Well, I have covered most of the things I wanted to on the daily. If you were following along, you should be okay. I'm sorry, the screen that I'm talking to is different than the one that shows me what your video is, so I apologize for that. I should have caught that sooner. And then all of the questions that you were sending also froze too. So the recording should be good because it records off of my screen, not yours. So I do want to get to the just the trade commentary. Oh, dang it. Now I'm disappointed. So here was Scott's screen for me today. And now I'm discouraged. I need to get over that. And so what Scott did with this one was basically a hybrid frog, and then he picked up the Z1 stop after 9, and then took the Z1 stop all the way down. So you can see here. Shoot. So after about 9, it looks like he probably picked up this Z1 and then took that stop, and then netted 0.46. So pretty good work. When I marked it up, this was my markup. So I offered that as what would you mark up for him? So the first thing that I marked up was not just a hybrid frog, but it's also the opening range 5. So if you take a look at that, not just as a hybrid frog box, but it broke a new 5-minute low. So that's good. I wanted you to notice this resistance level is that this peak of the dragon ended up becoming this peak of the dragon. And that leads you to this one. So therefore, be ready for the fail that occurs right in here. And then that sets up this big fail right here is a large scale. And the size of that move is the size of this move. So some other things that you can be watching for. Is that you notice a series of rising lows. So there's this low down here by the Bollinger Band Z3. And then after this excursion, there's a pinch and then another excursion. This low, and then there's a higher low right here. In the same way, there's also a higher low between the maximum adverse excursion of the RL10 and then here. So you get this set of rising lows. So this rising low from here to here in terms of the Z3 excursion, and then the rising lows of the RL10s makes this where he exited a perfect place to add in the long side trade, which would give you the supported spring crossing up into here. Okay. And then if you're using the standard, either the belly of the RL10 or the PSAR flip as your initial stop, you're going to be in great shape. And then what I want you to notice is that those price levels help inform you over here, so you can be preparing for this collapsing dragon that you see up here. You can be preparing for that here because you saw where those collapses were going to occur. So if you can get this RLXD, this supported winter crossing, which you want to get because this peak was lower than this one. You actually have a lower high which tells you this is legit, and the fact that it also crosses the VWAP. So this is not only a break of the dragon with a lower hump, but it also crosses the VWAP, and it spent most of the day under the VWAP. So this sell-off is the least surprising move of all. And now we can calibrate that move, because this move is the size of this move. Bang, same move. And now you have some places where, even if you didn't get this first one, or if you were looking to add a second one, here's a breakdown where it leaves Z1 and crosses the RL90, and this one, it breaks the belly of the previous RL10. It breaks this RL10 support level, so that's technically a collapsing dragon, and then it breaks the PSAR and this other support level, and it collapses here. So when these things collapse, see how fast that fails? And then now you get this sideways, and it didn't even break through the dragon, but collapsed again. You could actually think about another short position there. Now, what I mentioned was that you're preparing for the collapsing dragon in the winter, because it's happening in the winter here. That this was a nice spring. This failure to fail further was a spring, which it was, winter became spring. Spring improved. Here it instead of voting down, it voted up, and that gives you this move. And then it became summer right here. So this is where it picks up the summer, and it was a brief summer, and it rolled over, and now you have the fall. So that's where you're thinking about preserving, and when it cracks, it cracks. And when it cracked into the winter, so right in here, if you didn't get this one, you should get this, or this, or this, or this, or this. And so that whole range of opportunity is available, all set up by some initial very good work on the hybrid frog, and then noticing that this thing was failing because of that gap. So those are all the things that I am noticing that he and I can now have a conversation about. So if you're going to give coaching advice, you actually back up and first say, well, let me see what I can see by looking at the video, by looking at the game film, and then just commenting on the facts and the observations. And then make sure that you've seen everything that can be seen before you decide on that recommendation for action. The other thing that I would add that I didn't even mark up, but which you should be seeing, is notice this RL270 has been down all day, right? So that's why you should really be looking for that opportunity, because that confirms, there's a high, a lower high. And if you were to just map this out with big fat arrows, you would say from yesterday's close, and you add in the gap, here's a great big down move. And then the start of another great big down move. And then it was only a half move up. So in terms of reading the tea leaves, that's really what you want to get. And I would call this probably a blue sideways move. And look, that corresponds to that spring move. And this whole downward move is when the MACD is below the zero line. So you have a negative bias all the way through here. And notice that when this one went spring and then it failed back into the winter, that corresponds with the second leg down, which is where he made money on that trade. And then that fall gave you the warning that, hey, that thing is falling, and then this gives you the winter move. And that's what I want you to be looking for, is that move right there. That's the move. Okay? Here's the trader offered these charts. Yeah, Scott, you can get tunnel vision if you get too close to that. So sometimes when the rules are working, you got to back out of that a little bit more, and add more bars on the left hand side so you can see that context, so that you don't get tunnel vision like that so much. That is a real thing. So here are some things that I'm noticing. I just realized I could do that. That's cool. This just triggers the crap out of me. I got out way too early. This is the argument for standard position sizing. When it is that close, I mean, that's like 3 cents on a $250 symbol. Okay, so let's not let that become a 1.5 execution risk. Especially if I started the trade and I had that much risk, just keep, think about using that much risk so that you don't get these. You don't want to let a beautiful gain like this get erased by noise. But the fact that you say this got out too early, I'm trying to understand why you get out in that moment. And I don't know, because you don't tell me. So how can I give you coaching feedback when, if you're going to say that much, say all of it? And then I wonder, did the system shock of that loss stop you from taking that trade? And then at some point, when you have that much in your favor, you're not going to let it come back and be a losing trade. You're just not going to do that. And then trading 16 times a day, this feels like you're over trading and tired and emotionally you're just pulling the trigger because it flipped. Because you're taking, this is a good trade to take, but that's slow to get out. Don't let that turn into a losing trade. Just don't do it. So here was my markup in the moment. So I'm teaching you how to think like a coach now. Now, don't confuse constructive criticism with an attack, right? If I thought this guy would be discouraged by simple words, then I wouldn't even give him the words, because you're not going to be a trader if constructive criticism discourages you. So let's just get that out of the way. Now, here's some things that trigger me. When you say, hey, I got out way too early and stop, I have no idea what that even means. So if you're going to say that much, then say all of it. Answer all of the obvious questions. So when you're marking up your chart and you make a statement like that and you're going to give it to somebody and ask them to give you feedback, put yourself in their position and say, well, what are they going to think about what I put on? What are they likely to say? And then anticipate that. And so here's what I'm going to say. The obvious questions. You said you got out too early. What was your plan to get out? And why does that exit mean that it was too early? So I don't know what your trading plan was. So you got to tell me why it was. And then I don't even know why this is an exit by inspection. It just went into the winter. It just broke through Z3 or Z2. It just got to test Z3 on the way, and the rest of the market is melting down. And the PSAR is looking great, and the slope of the Bollinger Band mean is awesome. So I don't know what that means too early. What was the so if you got out too early, maybe it's because you weren't planning to. So something triggered you, but I don't know what that is because you didn't say. You didn't put that in your write up. And here's the point: if you don't put that on the chart, and you come back and study this 2 months later, are you going to remember why you got out too early, or was it a trigger, or was something? So you got to document the whole thing. What was the trigger that made you get out? How do you assess that decision that it was too early? Did you say it was too early because you decided for good reasons to get out there, and then you noticed how far down it came and say, well, in retrospect, knowing something now that I couldn't possibly have known later, I could not have known at this moment that it was going to go all the way down to here. But if I look down here and say, oh, in retrospect, that I got too early, then you're not being fair to yourself, and that's a sign of a psychological error that's putting unfair pressure on you because the one who's judging you has more information available than the person who was making that decision in the moment. This may have been a perfectly justifiable moment. If you tell me, hey, for whatever reasons, this was a really large win and I wanted to get paid early, that's a reason. That's actually a good reason to get out. But that's not getting out too early. That's getting out exactly correctly. It's only too early if you're using information that's not available, and that's not fair. So that triggers me. So you got to assess the decision and tell me why it was too early. Well, what lessons from this series of trades did you learn? I don't know because you didn't tell me. So you're going to make me ask you what lessons you learned. And if you hadn't thought about the lessons that you've learned, then you're not ready to ask for feedback yet because you haven't done your due diligence. Or what? You're waiting for me to tell you what lessons you should learn or you ought to have learned? You got to tell me what lessons you learned so that I can assess your ability to self monitor. And then we can have a conversation about why you think that was a lesson to learn. So I'm just going to tell you, don't post incomplete markups if you want feedback. Now, to be fair, all I do is go to the edge of what you've done and then go the next step beyond, in the same way that I tell my soccer players after they've done a good skill and a good series of moves, hey, next time I want you to add one more skill level to where you currently are so that we can keep making progress. Some other things that I'm going to say. Even if you got out here and with good reasons, either one of these two locations is a good enough reentry to make. The first black dot is after you got out, you broke through Z3, and this one rebounded and then broke through that again. So either one of those black dots could have been a reentry, and then you're going to get that move. You told me this was a collapsing dragon, but I can't tell if it's a collapsing dragon because I can't see where the previous bellies of the dragons are, and I don't see any line that comes over here to tell me where that collapsing dragon was occurring. So let me get the line. So was there some price level over here which said, this was the previous belly of the RL10 or the dragon that makes this a collapsing dragon? I don't know. I can't tell. I want you to notice this little button right here in TC2000, this allows you to replay. So you can go back. You can go back to some price action, blanking this whole screen and putting it over on the right-hand side of the screen, which is where you were seeing it when you made the move. And then you can play bar by bar replay with that function, which is amazing. So use that function to get better and see if you can change your performance from what it was. Next thing, it turns out that that this exit right here was a perfect entry for a supported spring crossing. What do you have? Harsh winter, winter becomes spring, spring crosses the dragon, PSAR flip. That's an entry. And then you get this move. And even though this one probably got you out as a sniper or a manager, then this one becomes a supported fall crossing. And now you get two legs of a trade with a micro pullback. And then on this one, the supported fall crossing, here's your initial stop. And then your Wuwei exit picks up right about here. And then you either get a sniper and or a managerial loss here, which is where you got short. And then when you get short here, when you got that much in hand, that was a full R execution in hand. Don't let that become a fractional loss. At least scratch it or take the PSAR stop in here. But when you got that much, don't let that become negative. Even if you're playing the kata, just don't do that, okay? So this should have been a routine supported spring crossing on that move and or a supported fall crossing on this move. So why wasn't it? Because of feelings? If it was because of feelings, then maybe you're trading at too large a level, or you haven't sorted out the chimpanzee psychology with the fireman, and I gave you some ideas today on how to do that. So, in spite of all that, you made money on that series. So you're getting paid. That ain't bad. I think, was it Neil? Yeah, Neil offered this one. Yeah. And so here's a chance for you to be a coach. There's actually two chances for you to be a coach. So I said, I identified at rapid inspection 8 things that I wanted to talk about. I'm going to want to talk about one and the hybrid frog short in here somewhere. I'm going to talk about a collapsing dragon or a supported winter crossing. I'm going to talk about another one here. Look at 1, 2, 3, 4, 5, 6, 7 opportunities to get short on this. You didn't take any of them, but even just going long, you made 3R, so that ain't bad. And to be fair, he's only taken the SSCs. That's awesome. Those 1 through 7 would also be entries if he was taking SSCs in S down. I don't know if he did, and maybe a span of control deal. But now notice Neil's excellence in adding additional commentary that gives me traction for coaching. He's now given me some of the backstory, and now we can talk about some of the different choices that he made. So here's your chance to do some coaching, is take that series of trades in those 8 different regions, and how would you mark that up and give coaching partner feedback to Neil? Now, Lisa is shy, and she sent me a beautifully marked up chart. And so I'm not going to tell you what I think about these things because I'm going to let you guys work that up. And then I'm going to post Lisa's chart later. And then you can compare what you think to what she thinks. And then you can tell Lisa what you think about her coaching. So this is how you start building the skill set in your small group peer advisory trading group to develop the skills of looking through the coaching lens and not just the trader's lens, waiting for me to tell you what I think. You're learning to think about what you think about what you did. The same way that Glenn Osborne, in a lesson back, it was probably May or early June, he described the way he does it. He does his live trading, and then he goes back and replays it bar by bar with his rules in hand and takes a fresh look at it and then compares his performance in the moment with his performance outside of the moment, and then sees what was the difference and why did he differ in the way he executed compared to his own robotic interpretation. And then that helps him understand what the effect of being live and in the trade is like, so that he can explore psychological issues. Then he compares that to the bar by bar stuff that I do, so that he can compare his techniques in and out of the trade with my techniques as a way to understand at a deeper level the possibilities of that rule set. And then from that, he commits to making his own decisions on how to adjust the kata and the rules to his own needs. That's brilliant. And that's why I know he's going to succeed as a trader, and he is succeeding as a trader as he makes his transition from full-time professional musician to supplementing his income with trading independently. So Glenn's going to present his materials in the September virtual research symposium. And he's going to do a full presentation with the systems and beliefs and the R multiples and the histogram and the analysis, and have it peer reviewed by a couple people. And then we're going to talk about his research. And that's an example of one of the presentations that'll be available to people interested in the research weekend. And your goal should be at some point to make that kind of presentation to get your brown belt test and your black belt test when you're inventing your own system. Brown belt test is when you take one of our standard systems and then apply it to yourself and then show your modifications and then present a full up learning process. That's the brown belt. Black belt is when you are doing your own independent research, maybe suggested by stuff we do, but doing your own independent research. And that's how a lot of the systems that and strategies we come up with comes from that kind of rigorous, collaborative, analytical community of practice that Ken Hum was describing. That's a separate product from the Patreon support. I'm going to price it at $1,000 for people that are not making presentations. If you're making a presentation, it's because I approved you to do it, and then you'll get the package on the house for doing the work and supporting others. So I'll write something about that this weekend, but that's the preview of coming attractions. If you're a discount coin member, that's 50% off on that. That's everything I want to cover. It's already past 10. You've suffered long enough, and I got to get this processed so you can see what was going on. Hopefully, maybe the narrative was worth it, even if the screen freezing sucked. I should have caught that sooner. I'll do better. I got to change my screen array so that I don't get surprised by that as much. Thank you so much for your patience. We'll get this published. Take good care. Tomorrow is going to be a big day. Today was a sell-off across tech land. Oh, I don't know if I even covered this part. Just as a reminder of what worked and what didn't work today. Very few things work today. Finance, materials, Alcoa, that's it. Everything else sold off hard. So even though it was a small range day, be ready for fireworks tomorrow. That's the last thing I'll say on that. This is the nice work that Lisa did. So you have your work cut out for you if you take that coaching challenge. I was actually going to do something like this and said, hey, offer a $100 coupon to the best coaching response to Neil on those 8 areas, and then let Neil decide which one was the most useful to him, and then I'll give that person a coupon. And then that led me to that whole thought experiment about how would you value coaching if you thought it was, how would you put a price tag on it? How would you demonstrate that you considered it to be valuable? If it's a valuable skill, it must be because receiving feedback from a coach is of value to you. So how can you create the coaching mindset so that you can coach yourself and add value to your own trading? That's a skill that's learnable. That's what the essence of tonight's lesson was really about. And Lisa, I thought your markup was excellent here and it will be of great use to Neil. And you two should exchange emails so that you can send it directly to him. And I'll publish this later for others to emulate, because you've done an excellent job on doing it. So that's the last thing I want to say. So take good care, guys, and we will see you tomorrow. And we're going to be up and at 'em tomorrow. Take good care.